Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, we're dissecting the formidable Alphabet Incorporated, ticker symbol Google, as it stands at a critical juncture in the market. The confluence of upcoming earnings and groundbreaking AI news has set the stage for potentially significant price movements. First, let's look at the broader context on the daily chart before we dive into the recent catalysts driving investor sentiment. The news surrounding Google is overwhelmingly positive heading into its Q2 earnings report, which is anticipated around July 23rd. Bank of America recently raised its price target for Alphabet, signaling a strong vote of confidence from a major financial institution. This positive sentiment is further fueled by reports that ChatGPT chooses Google's AI powerhouse, which is a massive win for Google Cloud and its deep investments in artificial intelligence. Moreover, Google's recent commitment of $25 billion to the world's largest hydropower deal underscores its long-term vision for sustainable AI expansion. These fundamental tailwinds paint a bullish picture for the company's future, directly impacting investor perception and, consequently, its stock price. Now, let's transition to the technicals and examine the daily chart, which provides a comprehensive view of GOOGL's performance. Looking at the entire dataset, we can observe a clear bullish trend throughout most of 2024, with the stock reaching significant highs. Specifically, Google saw an impressive rally into early February 2025, peaking around the $207 level. However, this was followed by a sharp but controlled pullback, finding strong support around the $145 to $150 range in April and early May of 2025. This $145 to $150 zone has proven to be a robust long-term support, acting as a bounce-off point for significant reversals. The all-time high of approximately $207 from February 2025 now stands as a critical resistance level that the stock will need to overcome for a sustained breakout. Let's zoom in on the daily chart to the period from May 2025 through today, July 18, 2025, to observe the more recent price action. Following the May 7th low of 151.38, Google initiated a strong recovery, demonstrating a healthy upward trajectory. We've seen periods of consolidation around the $170 to $180 levels, which are now acting as intermediate support zones. Notice the significant volume on June 27th as the price surged to a close of 178.53, only to pull back slightly in subsequent days. The closing price for July 17th was 183.58, indicating continued upward momentum, but also some resistance around the $185 to $186 mark, which needs to be carefully watched. This recent bounce confirms the 170 to 172 region as a crucial short-term support, reinforcing the bullish sentiment from the news. Shifting our focus to the 1-hour chart, let's examine the price movements from July 7th to July 10th for a more granular view of recent volatility. On July 8th, we observed a notable price drop from around 177.50 to 173.50, accompanied by elevated selling volume, indicating short-term bearish pressure. However, the stock quickly found buyers, showing a subsequent recovery throughout July 9th and July 10th, reaching back into the $175 to $176 range. This rebound on the hourly time frame suggests strong underlying demand, mitigating the impact of immediate selling surges. These short-term fluctuations highlight the ongoing battle between buyers and sellers as market participants react to daily developments. Now, let's drill down even further to the 15-minute chart, specifically focusing on the trading activity throughout July 17th, the most recent available data. Here, we can pinpoint the intraday price action that led to yesterday's daily close. Observe the significant intraday pullback around 13:32 Universal Time coordinated on July 17th, where the price dropped sharply from above 182 to around 180.87, aligning with the daily chart's slight decline. This move was characterized by a surge in volume, confirming strong selling interest at that specific moment. However, the price quickly recovered from these lows and spent the latter part of the trading day consolidating and showing attempts to push higher, finishing near the 183.70 mark. This detailed view reveals short-term support and resistance forming around these intraday turning points, offering precise entry and exit opportunities for active traders. Bringing it all together, let's discuss the overall outlook for Google. From a bullish perspective, the strong fundamental news, including AI adoption and significant investments, coupled with a robust recovery from recent lows on the daily chart, suggests continued upside potential. The upcoming earnings report on July 23rd could serve as a powerful catalyst for a breakout if the results are favorable and guidance is strong. Conversely, bearish sentiment could arise if earnings disappoint or if broader market weakness impacts the tech sector, potentially leading to a retest of lower support levels. The recent high volume on down moves, as seen on the hourly and 15-minute charts, indicates that sellers are still present and could push prices lower if momentum shifts. To recap the important price levels to watch for Google. On the downside, initial short-term support is around $170 to $172, which would likely hold unless the earnings report is very poor. Stronger, long-term support lies firmly in the $145 to $150 range, a critical level that has historically triggered significant rebounds, and it's highly unlikely we see this level retested without a major market downturn. For upside potential, immediate resistance is near the $185 to $186 mark, followed by the $190 to $195 zone, which represents a previous area of consolidation and reversal. The ultimate resistance to watch for a new all-time high is the $207 level. An unbiased prediction suggests that if GOOGL's Q2 earnings surpass expectations and demonstrate strong AI segment growth, a break above $185 to $186 is highly likely, potentially targeting $190 to $195 in the short term. However, a significant miss on earnings or cautious guidance could lead to a pullback towards the $170 to $172 support, which has a moderate likelihood. A retest of the $145 to $150 level is less likely, probably requiring a broader market crash or highly negative company-specific news. Moving forward, keep a close eye on the July 23rd earnings call, as this will be the primary short-term driver for GOOGL's price action. Also, continue to monitor developments in the AI space and the overall performance of the tech sector, as these external factors will heavily influence GOOGL's trajectory. Thank you for joining us on Explain the Charts. Remember to like, subscribe, and hit that notification bell for more in-depth analyses.